Stop everything right now, because what I'm about to tell you changes the game so fundamentally that if you don't understand it in the next few minutes, you're going to be left behind in the ruins of the old economy. It's January 19th, 2026, and while you were sleeping, the United States government just signed the death warrant for the Comex. This is MarketPulseUSA, and you're probably looking at your screen seeing paper silver hovering around 93 bucks. You're seeing Shanghai trading at a premium of $15.73 over spot. You might think that's the story, that the $12 spread between East and West is the headline. You're dead wrong. That's just background noise. That's just the symptom of a broken market. The real story is that a new player just entered the chat with a printing press that can print infinity. We're talking about the United States government stepping into the silver market. We just got confirmation of a massive, unprecedented policy shift coming straight out of Washington, D.C. Buried inside the latest defense appropriations language is a directive that should send chills down every short seller's spine. The U.S. government officially approved a $2.5 billion acquisition program specifically targeted at critical minerals to replenish the strategic national stockpile. And guess what's at the very top of that list? Silver? Let that number sink in. $2.5 billion. Now, in the context of national debt, that might sound like chump change to you. Maybe you're thinking they print $1 trillion a week. What's $2 billion going to do? You're missing the scale of the physical silver market completely. The entire annual production of investment-grade silver is tiny compared to this. At current prices, $2.5 billion represents a massive percentage of all available silver sitting in registered Comex vaults. But it's not just the money, it's the mandate behind it. When a hedge fund buys silver, they're price sensitive. If it goes too high, they stop buying. They've got budgets and risk controls limiting their moves. But when the U.S. government buys silver for national security purposes, price becomes irrelevant. They don't care if it's 90. They don't care if it's 150. They don't care if it's 500 bucks an ounce. They've got a mandate to secure the metal because without it, their missiles don't fly. Without it, their satellites go dark, and the entire green energy transition they've bet everything on collapses into dust. This is the moment we've been warning about for years on this channel. We told you eventually silver would stop being treated as a speculative asset. We told you it would start being treated as a strategic imperative. We told you eventually the government would realize they're naked, and that realization happened today. Think about the timing carefully. Why now? Why on January 19th, 2026, does Uncle Sam suddenly decide he needs $2.5 billion worth of metal? Because they've seen the same data we have about inventory reports. They know the United States is dangerously dependent on imports for this critical metal. We import roughly 6,400 tons of silver every single year just to keep the lights on. We rely on Mexico, we rely on Peru, we rely on supply chains breaking down in real time. And with geopolitical tensions exploding everywhere, with trade wars with China heating up, the strategists in the Pentagon realized they're vulnerable. They realized if the ships stop coming, the American war machine stops working. So they're entering the market, but not a healthy market full of supply. They're entering a market already in the terminal phase of a shortage. Imagine a grocery store with only 10 loaves of bread left on the shelf. There's 100 hungry people outside fighting for those 10 loaves. And suddenly, a billionaire walks in with a blank check saying, "I'm taking all the bread by order of the president." What happens to the price of bread for everyone else after that? What happens to availability? It vanishes instantly. This $2.5 billion buy program is effectively a giant vacuum cleaner being turned on inside Comex vaults. It's going to compete directly with Apple for supply. It's going to compete directly with Samsung and Tesla. And it's going to compete directly with you trying to buy physical metal. This is why we call it the new whale entering the market. But this whale is different because this whale makes the rules. And the scariest part is this announcement creates a self-fulfilling prophecy. The moment industrial users and tech companies and solar manufacturers see the US government panic buying, they're going to panic buy too. They can't afford to wait and see what happens next. If Apple thinks the DOF is going to corner the silver market, Apple's going to try to front-run the dud. We're looking at a bidding war between the most powerful entities on planet Earth. And the prize is a tiny shrinking pile of metal rapidly disappearing. You got to understand the psychology of this massive shift. For decades, the US government sold off its silver reserves. They dumped strategic stockpiles because they believed in the just-in-time global economy. They believed they could always buy what they needed on the open market whenever. Today marks the official end of that philosophy completely. Today marks the beginning of the just-in-case economy. They're acknowledging the free market failed to secure necessary resources for national survival. So they're intervening, and when government intervenes in commodity markets, they don't do it gently. They do it with the grace of a bulldozer. This $2.5 billion is just the initial tranche, just the down payment. Once they start buying and realize how little metal is actually available, that number will grow. They'll print whatever they have, to print to get the metal they need. This brings us to the most critical question. Where are they going to get it from? If they go to the Comex, they're going to drain registered inventory to zero in weeks. If they go to miners, they're going to lock up future supply for years. There's no spare capacity in silver anywhere right now. Mines are bleeding, grades are falling, strikes in Mexico are shutting down production. So the United States government is essentially announcing a hostile takeover of global silver supply. This is the catalyst that changes the math from bull market to market failure. Because you can't have a functioning futures market when sovereign power is hoovering up the underlying asset. The shorts are dead. The banks who are naked short just got their death sentence. The ones who sold paper, promises to millions of investors, are staring at this headline throwing up. They know they can't cover their positions anymore. How do you cover a short when the federal government's on the other side with a bottomless wallet? You can't, you default, or you get crushed. So while retail traders look at 93 on their charts drawing trend lines, tectonic plates shifted beneath their feet. The price on screen is irrelevant because it reflects a market that existed yesterday, a market where U.S. government was a passive observer. That market's gone. We're now in the era of strategic nationalization of critical resources. And if you think this is bullish, you're understating it. Bullish is when people want to buy something. Strategic necessity is when people have to buy or they die. We moved from want to need and supply simply isn't there. To understand how desperate this situation is, you got to look at data from Friday. You got to look at numbers proving vaults are being looted before government even writes the first check. We need to talk about Comex drain and mathematical impossibility of what just happened. According to official data released, Friday total deliveries for January contract hit 41.44 million ounces. Let me repeat that so it burns into your memory. 41.44 million ounces. That's 8,288 contracts standing for physical metal in a month supposed to be dormant. That's not cleanup, that's a run on the bank. That's an enormous percentage of available float being ripped out in weeks. To see who's pulling the trigger, you got to look at daily issues and stops report. This ledger tells you exactly which bank is selling and which bank is buying. Friday's report tells a story of absolute desperation in the market. On Friday alone, there were 345 delivery notices issued. That means 345 contracts said I have silver and want to deliver it. And who stood there with wallet open to take every single bar? JP Morgan out of 345 notices. JP Morgan's house account stopped 340. Do the math on that ratio, 98.5%. JP Morgan didn't just participate in the market, they were the market. They stood there like a goalkeeper catching every ball kicked at the net, and who was on the other side desperately trying to cough up metal. Bank of America issued 275 of those notices. This is war between the banks playing out in real time. Bank of America is bleeding silver, they're the ones naked short. They're frantically trying to find metal to satisfy delivery demands, and JP Morgan is the vampire sucking life out of competitors. They're taking every ounce that hits the floor because they know what's coming. They know about the $2.5 billion government buy program. They probably helped write the legislation themselves. So they're front-running the United States government before Uncle Sam's check clears. Now let's look at the death math and timeline. The most important number in silver market is registered inventory. Registered means silver fully warranted, available, and ready to deliver against futures contract. It's the only silver that matters for Comex operations. As of latest report, registered category dropped to roughly 120 million ounces. That sounds like a lot. Right, 120 million. But compare that to burn rate we just witnessed. We saw 41.4 million ounces disappear in one single month. A month that was supposed to be quiet. If you take 120 million and divide by 41 million, what do you get? 2.9 months, less than 90 days. That's the timeline to zero, and that's not prediction, that's arithmetic. If this rate of demand continues, and we know it will accelerate because of government mandate, Comex will be physically empty by April. There will be no more registered silver to deliver against contracts. And what happens when Vault hits zero? What happens when Trader stands for delivery and JP Morgan looks in Vault and there's nothing but dust? It triggers a legal clause written into fine print of every futures contract. Force majeure, act of God, unforeseeable circumstances beyond control. They'll declare they cannot fulfill obligation to deliver the metal. And instead of giving you silver you paid for, they'll force you to accept cash settlement. They'll write you a check for paper price, maybe 93, maybe 95, and tell you to go away. But by time they write that check, real price of silver on street will be $200. You'll be cashed out at a loss, holding fiat currency while metal moons. Subscribe to MarketPulseUSA, because this story is moving fast and the window is closing. This is MarketPulse USA. Stay sharp, stay informed, and we'll see you in the next one.